Inflation not only increases your cost of living, making it harder to save, it also devalues your savings. It's a double whammy. What do we do now? Inflation can be a nefarious villain when it comes to preserving or growing your wealth. Essentially, inflation reduces the purchasing power of your money over time. As a consequence, financial experts advise diversifying portfolios to include assets that can weather the inflationary storms. We explore various asset classes that have historically demonstrated resilience against inflation and outline how small investors can utilize them to protect and grow their assets. Real assets. Real assets, such as real estate, have intrinsic value and tend to appreciate over time, often keeping pace with or outperforming inflation. In particular, rental properties can provide a steady income stream that can be adjusted for inflation. Housing costs, rentals, are often a major driver of inflation. Consider investing in real estate investment trusts, REITs, which allow you to invest in real estate markets without having to buy and manage properties. REITs can be traded like stocks and typically offer comparatively high dividend yields. Commodities, gold and silver. Commodities like gold and silver serve as traditional hedges against inflation. Their intrinsic value does not deteriorate with the devaluation of currency. You can invest in commodities through exchange-traded funds, ETFs, focused on gold or silver. Another option is to buy physical gold or silver, though storage can be a challenge. Buying commodity miners or producers can also provide a hedge against inflation. However, commodity prices can fluctuate significantly due to supply and demand dynamics and can be quite volatile. For this reason, it is common for commodities like oil and agricultural products to be used as speculative vehicles. More sophisticated investors might consider commodity futures, though these are more complex and risky. Equities, dividend-paying stocks. Equities, particularly those that pay dividends, can be a good inflation hedge. Companies that have pricing power can pass increased costs to consumers, thereby maintaining profitability. For small investors, dividend reinvestment plans, DRIPs, or purchasing shares of dividend-focused ETFs can be viable routes to explore. Inflation-indexed bonds, TIPS. Treasury inflation-protected securities, TIPS, are U.S. government bonds specifically designed to protect against inflation. The principal amount of TIPS increases with inflation and decreases with deflation. TIPS can be purchased directly from the U.S. Treasury or through mutual funds specializing in inflation-indexed bonds. Cryptocurrency, Bitcoin. Though controversial, some see cryptocurrencies like Bitcoin as a modern alternative to gold, a digital store of value. Small investors can buy fractions of a Bitcoin through cryptocurrency exchanges. However, the regulatory landscape is continually evolving, and there are notable risks involved. While the correlation of Bitcoin performance to the S&P 500 has been high, it has been going down, which makes the cryptocurrency a good option for diversification. Floating rate bonds, FRBs, or floating rate notes, FRNs. A floating rate bond, also known as a floater or adjustable rate bond, is a type of debt security that pays interest at a variable rate. The interest rate on these bonds is periodically reset, often aligned with a certain benchmark rate such as LIBOR, London Interbank Offered Rate, or the U.S. Federal Funds Rate, providing some protection against inflation. Floating rate notes or bonds can be purchased online through treasurydirect.gov or through a bank, broker or dealer. Floating rate bond mutual funds and ETFs, which invest in a collection of floating rate debt, providing more diversification than buying individual bonds, are also available. Private equity and venture capital. It is well established that private equity and venture capital have the potential for high returns, which can outpace inflation. However, they are less liquid and often require a significant minimum investment. Crowdfunding platforms like Seed Invest, now owned by StartEngine, are making it increasingly possible for small investors to participate in private equity and venture capital investments. While no investment is a guaranteed safeguard against inflation, diversifying across different asset classes can offer some level of protection. Before making any investments, it's crucial to conduct thorough research and consult with a financial advisor. Due to the rapidly changing nature of financial markets, It is advisable to look for the most current data and regulations when making investment decisions. We hope this guide serves as a comprehensive resource for small investors looking to shield their portfolios from the erosive impacts of inflation. Thank you for watching.